Hello, traders. I've just realised I was muted then. How are we all? Welcome to this week's live stream. It's Tuesday, the 19th of November. And we've had some very interesting updates in the market today. We've seen the Bank of Japan yesterday kind of alluding to the fact that there could be more intervention, but we've seen escalations between Russia and Ukraine come into the forefront today. We've seen the market move a little bit more risk off, which I'm going to be discussing in today's live stream. We're also going to go through sort of currency strength and weakness, what's on the cards for this for us this week. One market that I really like the look of was pound yen to the downside. I actually talked about this in a video yesterday, so I'm going to cover that in a little bit more detail today, my thoughts exactly on what's going on in that particular market. Actually missed out on a short position today, and that's because it didn't quite give me the price that I wanted to get short at. We had this kind of aggressive move come in place, so I'll talk you through it. What else we're going to talk about today? We're going to talk about what the data's coming up this week, some strength and weakness. We're going to look at the commitment of trader reports as well. So we're going to go through all those. Who have we got in today then? So Royston, how are you? I'm keeping really, really well, mate. I hope you're doing well too. Haven't heard your name in here for a while, Royston. So I hope you're well. Hope the family are well. Has it snowed down in Wales? It snowed here today in the UK. So looked outside this morning and the snow was on the ground, and I was like, oh, lovely. So I had to go out this morning and get the snow off the car and whatnot. So yeah, that was fun. Binner, welcome. You were spot on pound yen. For now, it's kind of moved, but yeah, it's not about being right or wrong. It's just about taking advantage of it if we can. And you know, I haven't even took advantage of it, so I'm a little bit looking like a little bit of a fool here. Great, thank you. You have snow, but not settling. Right, good. I hate when it snows in the UK. Everything just shuts down, doesn't it? It's not fun. Can't really get anywhere. So yeah, but yeah, good to hear from you, Royston. Yeah, for now. We're going to talk about pound yen in a little bit more detail, because this was in a video that I did discuss yesterday, and obviously we were looking at some of the situation with the pound at the moment. I've got a feeling, well, I say a feeling, you can't trade feelings, but the data is pointing towards sort of a little bit of bearishness coming for the Great British Pound, and that's what I'm leaning more towards. Obviously, I still need confirmations off certain currency pairs to agree with that before I go and trade that theory. One of those was the Japanese yen, and yeah, we'll go into this in a lot more detail. Oh, my Siri just activated there for whatever reason. Must be wanting to know what's going on in the markets. So let's get into it then. Let's have a little look at what's going on. This is pound yen chart. This is what we were looking at in the video yesterday. I do want to obviously talk about the news and the fundamentals in the market. If you are new to the Blueberry live stream, my name is John. I'm the Senior Currency Analyst, Senior Market Analyst. What I do is I'll break down the markets. We'll have a little look at the fundamental outlook, and then we'll have a little look at some charts of interest, essentially, see how I'm digesting the market. So if you are new, hit that thumbs up, hit that subscribe button. Right, let me bring in the pen tool first, and then we will head over to our Forex calendar, our economic calendar, so we can have a little look at what's coming up in the markets this trading week. So let me zoom right in so you can see this. I'm going to briefly discuss what's going on in the news, but it is important to know this information. It's important to at least understand what times there's going to be high impact data, because I don't know how or what your trading style is. I'm in the 12th of December here. Right, let's go all the way back. Let me refresh the page. Where are we? Gotta go up. So 19th of November is where we're at. So yeah, there's been some really interesting developments. This is what I was kind of talking about at the start of the stream. BOJ Governor ศ์speaking. Okay, had G20 meetings yesterday as well as ECB President Lagarde. Nothing really dramatic came out of these events. Only real thing was obviously the situation between Russia and Ukraine at the moment, or at least the remarks that have come out recently that I think Putin, I want to get this right, so Putin is basically hang on one second, let me use the right terminology here. That's it, right. So Russia's Kremlin said that the updated nuclear doctrine signed by Putin is very important text. Putin warned that Russia reserves the right to use nuclear weapons in an event of aggression. The US gave Ukraine permission to use long-range US missiles inside of Russia in its war within the nation. So escalations between Russia and Ukraine, escalations between Russia and the other global players, you know, the US being a big part of that. Russia's obviously seeing the fact that the US have allowed Ukraine to use US style or US based missiles or US missiles that they have given to Ukraine in the conflict, which has given Putin the opportunity to kind of come back and say you're getting involved with the war and that escalation could continue. So escalation, uncertainty, that can breed a bit of fear within the markets, and that's what we're seeing at the moment. So we'll discuss that as well going forward. CG, I'm doing really well. Hope you're doing well. Vincent, hope you're doing well too, mate. Right, let's have a little look at what's come out today. Okay, so it's the 19th today. We had monetary policy meeting minutes from Australia. No big changes there. Monetary policy report hearings in the UK. This was a big one today. There's been lots of potential talk that the UK or the Bank of England at least are going to be bringing down those interest rates. Okay, so interest rates at the moment in the UK at 4.75%. I'm not 100% on that. But around 4.75%. I should know that considering I did research on it yesterday. But around that 4.75% mark, and some expectations of 100 basis points cuts, right? Now that sounds a lot, but it's just 1%, okay? So 1%, so thinking about bringing rates down towards 3.75%. So cuts coming potentially in the UK. Why? Well, lack of growth, right? GDP, the gross domestic product of the UK, actually expanded by 0.1%, okay, recently. However, this is down, okay, so Q1 of 2024, okay, we were at 0.7%, right? That has now come down to 0.1% Q3, okay, of 2024. Now, yes, that is bad, but the forecasted growth really is what's concerning in the UK. The lack of growth essentially is causing problems in the UK, and that's where I feel that the pound might come under a little bit of weakness within the markets. I've had some CAD CPI. I haven't actually seen this yet. So CAD CPI month on month came in at 0.4%. Perfect. I'm actually looking for how's that affected dollar CAD, because I liked dollar CAD to the downside. So dollar CAD has started to fall a little bit here. I'm just waiting for some technical setups here, but I will go over why I like dollar CAD short as well. I'm just waiting at the moment, being patient with those moves. So CPI month on month up to 0.4%, up from the previous minus 0.4%. So fairly big jump in CPI, which is good. Median CPI year on year, and trimmed. So trimmed is more like your core CPI, that's up to 2.6%. So well above those 2% targets there, which might be a welcome relief for the Bank of Canada, who have been cutting rates aggressively. Big data tomorrow then. China loan prime rate, 1 year loan prime rate, come down to 3.1%. Are we going to see China bring in more stimulus? That is the question that everyone wants to know right now. If we do see some increases in that stimulus, or see the bazooka-like stimulus that the PBOC have, or the People's Bank of China have talked about, then that could be very supportive of the likes of the Australian dollar. You could see commodities be supported as well, especially the likes of copper. So very interesting to see how this one will play out for China going forward. The market's basically called their bluff at the moment, and it's been working pretty well for them. You see the Hang Seng or the HK50 for us retail traders, that's come down quite considerably over the past few weeks after we had that big breakout. CPI year on year in the UK coming out as well tomorrow. We are forecast a little bit of a rise here, so that'll be interesting to see if we do that, considering the lack of growth that we've had in the economy. And then we've got some more Bank of Japan stuff, but we'll talk about this going into Thursday's live stream. So let's get into some of the fun stuff then. Let's have a little look first at the currency strength meter. So some of you have been very eagle-eyed and noticed that these are not in the Forex week ahead analysis videos anymore. We're trying to keep the Forex week ahead analysis video very concise. So I'll be showing the currency strength meter within this within the live stream, essentially, because this is what I use on a week-to-week basis. So what have we got here then? So the euro has been on a decline. We can see that it's down from +1 to -2. So euro is on the decline, pound on the decline, which is things that we've been expecting over these past kind of couple of weeks. Australian dollar still remains bearish as well. No surprise there. We've not had any stimulus from China, so expecting the impact of China to continue to have an impact on Australia. New Zealand remains the same. US dollar remains the same, but in the reversal zone. Okay, so you can either look for strength or start looking for a reversal situation. CAD has been a stronger currency. Quite like the idea of being a buyer of CAD at the moment, so I'm keeping my eyes on it. Swiss at -3, no change. Yen +3. Okay, so this week really, you can see I've got a long column here and a short column here, and I've basically been looking for longs on the dollar. Now it is coloured in yellow. If you look at the key over here, which I've just put in just to kind of help everybody when they're looking at this, you've got yellow is a reversal. Okay. You've got orange is neutral, so that basically means that I'm not necessarily looking to do anything on that market. Bullish and bearish. Markets that I'm expecting to be bullish or bearish. Then we have seasonal patterns. Okay, so green seasonal is bullish. Kind of a pink color is bearish seasonals. And then we've got COT signals as well. Okay, so lots to kind of take into here. It's evolved a little bit as we've gone along. But yeah, so dollar, yen, and CAD are markets that are like to the upside. If I look at the short side, I like euro, pound, Aussie, and Swiss. The only thing with euro is we do have a bullish seasonal pattern that starts around about the 22nd of November, but we'll see if that can start to form at any point. So these are the currency pairs that I'm watching. Okay, right. We have a COT signal on soybean. Don't know if anybody tries soybean oil. But yeah, there's that there if you want to take a look at that. But essentially, out of those currencies, I'm just looking at a handful. Okay. And if we just have a quick look at what those are, I'm just going to scoot this back to 90% so we can just kind of fit this in to the screen here. Okay. So the dollar still technically has a bullish COT signal at the moment. Still technically a strong currency. So I'm looking to see how this plays out. Euro, pound, Aussie, still very much in bearish downward trends. So having a look at those. Kiwi, I'm neutral on. Dollar CAD, looking for a potential reversal as well, but I know that market is very bullish. Also, dollar Swiss, very bullish as well. Looking for bearish opportunities on Aussie yen. So I was looking at Aussie CAD, but it didn't meet all my criteria to be sure on Aussie CAD. So not necessarily looking at that move there. Aussie yen I quite like the look of, as well as euro yen, as well as pound yen too. So that's what I'm looking at going into this trading week, really from a currency strength and weakness point of view. Some questions, Royston. If you have time to view possible direction of the S&P 500 will be appreciated, although it's been incredibly bullish. I'm anticipating a rotation. We'll deep dive into that because there's an interesting commitment to trade report signal on the S&P 500, which I'm eager to have a look at. Afternoon, Irfan. Hope you're well. Kiwi seems to be gaining some strength, also a big support. Yeah, neutral on Kiwi at the minute. I'm neutral on Kiwi at the minute. We'll take a look at what's been going on as well on the COP report. So let's do that now, actually. Let's dive into the COP because this is something that I use in my trading quite a lot. So I want to bring this down. So, the guys over at Markets Made Clear using their platform today to go through the setups potentially on the COP reports. So this is what we're going to be using today. Hi Ratish, hope you're good. Let me just grab a pen tool. So just by eye on this page alone, we'll have a look at the extreme page as well. Canadian dollar is standing out to me. Why? We're starting to come up into a potential bullish signal for CAD futures, which is dollar CAD to the downside. Okay, so looking to potentially look for some CAD longs that kind of coincides with the currency strength meter as well. So big tick here for CAD, just waiting for some other influences to turn around. You know, things like oil. You know, if we can get oil prices higher, that's usually good for the Canadian dollar. CPI coming in higher has been good. So I want to see how the market is kind of changing on this kind of data. Dollar index still in that bullish territory as well. But really, one of the ones that I really wanted to take a look at, S&P 500 to come away from that sell signal. Okay, so if we just open the S&P 500 up and we just have a little look at our net positions within the market, we did have a short signal on the S&P, okay, which was just down in here. Why did we have that signal? Well, if we look at the commercial positioning, they were aggressively net short, whilst the hedge funds were aggressively net long. Okay, typically in those scenarios there, or in that scenario there, we can see a reversal in price. Now, we did get a reversal last week. You know, the market did come in lower, just to kind of show you that. If we go over to the S&P 500 and we have a look at the weekly chart, and I can just zoom in. It's a little bit more interactive on TradingView. You can see we had that bearish close last week. Okay, so I like the idea of seeing this continue. The correlation between the S&P 500 and the risk sentiment in the market, for one, but two, the correlation between that and gold is quite strong at the moment, and gold prices have been falling as well, right? So looking to see if we can get a continuation of this downside here on the stock market. Also, there's been a lot of talk about being very bullish from the Trump trade. This was the price action from the Trump trade, okay, which was here. And the market has already come back into that zone now, starting to see a bit of a push up. Now, I do like the idea of being bullish stock indices, but am I bullish at these prices? I need to see some kind of significant change. Now, if I'm looking at it from a technical analysis strategy point of view, look at my stochastic indicator down here, right? Okay, I just want to highlight this. We're starting to turn more into sort of bearish, right? Okay, you can see on the stochastic, let's grab a different color pen. We've got it pointing downward. That to me is a little bit more of bearish momentum within the market. Okay, what I want to see is this instead. Before I start getting long on stock markets, that's what I want to see. And just to kind of prove my point there, if I just hover back this red line where it did the crossover and pull up, right, was just in here, just after the, or just on the Trump trade, essentially. The last time before that was back here, okay, when we had the crossover at the lows. Last time before that was down in here. So I want to be looking for those. Yes, we did get a bit of a false signal here as well. Okay, just to show you, it doesn't work all the time, but the likelihood is if we get that move, the market can accelerate. It failed at this one, that's fine. This one we did get a market acceleration. I didn't highlight this one, but also again we got a market acceleration. So I just need the technicals to set up here for me to be a buyer of the stock market again. At the moment it's bearish momentum, so what I like to do is look for areas where we could find demand. One of those being down towards these lows, right? So down towards that kind of 5,750 kind of areas, down towards 5,700. That area down there would be a good support level. We'd also probably see that hold with some trend line support as well. If I just pop in a trend line, if my mouse wants to work today, probably looking at something like this, right? So that kind of near-term trend line. Again, not the huge fan of trend lines. I do like to point that out, but you know, some things can be a little bit obvious. You've got almost this kind of ascending channel going into the market. So if we do get something in here and then we get the stochastic kind of pointing back to the upside, you know, I'll then look at my lower time frames to see if we get that kind of breaking trend and see if we can get a continuation move higher. So that's what I'm looking for here on the S&P 500. But at the moment, I feel like this is still a little bit bearish. I don't like the fact that this has started to fade because markets have been breaking higher. So I'm interested to see how far this move can go. This would typically be a kind of like a market top for me, and I would be looking to get short on this information. But I've not had great success with shorting stock indices in the past. So I don't tend to short them. I tend to wait for them to make the move back, and then I look to buy them, because, you know, if we look at history, right, you don't necessarily want to be on the short side of the stock market, right? You want to be more the long side. However that deep retracement is, you know, that's for us to have a look at and to see where the market reacts. You know, if the market comes back in this area, we get the lower time frame change of trend, we get everything else that we kind of look for, then yeah, great, we can be buyers. But if it doesn't, it could continue and move down to other areas of support. But I generally don't short stock markets, just because I've been battered in the past. So does anybody else short stock markets? Let me know. Hi, just nothing. Hope you're well. Bitcoin has been consolidating over the past few days. Given this trend, will its performance in the coming days be bullish or bearish? Your insights on this matter would be valuable. Bitcoin's a really hard one. Now, I don't know whether this might sound a bit unreasonable, but I'm willing to miss the move on Bitcoin, I feel. Now, obviously, Bitcoin, we had the Trump trade, right? Let me just remove some of this. Let's just head it to a weekly chart. Market consolidated for a year. This was it's the halving year as well this year, wasn't it? So we had the halving cycle. Usually a few months after that, we start to see bullishness. But this has been moving because of Trump and the fact that Trump could sort of deregulate the crypto space, but also his statements are that he wanted sort of cryptocurrency to, you know, the USA to be the home of cryptocurrency, right? So that market moving higher makes a lot of sense. Do I like being buyer of this market here? No. I remember we did a talk with one of our partners at Blueberry Trading, Martin, and we were talking about this 50k level would have been a nice level to buy, and I think I think that's the trade for me. That was the trade down at this 52. Do I like getting long up here? No. Now you have to kind of put two caps on, I guess. If you're willing to sit through this, right, which is, I guess, the consolidation that we had after this explosive run up back in 2020. If you're willing to sit through that and think of it more as an investment thing, where you put in low risk on it essentially, but you're looking at it as like a long-term investment, then that's your play really. If you're looking to trade the price of this, then you don't want to be buying it up here, right? It just doesn't make sense to buy up here. This is where the crowd would be getting involved, in my point of view. I would say that the crowd would be getting involved here because price has made new highs. Everyone's talking about 90k Bitcoin and talking about the fact that it's going to go to 100k now. And they might be right. They might be right. We might get a move up to it. Because what I'm really waiting for, and this may sound really sad, and I hope none of my friends are watching right now, but if my friends start asking me about Bitcoin prices and where it's going, that's when you know to get out. It's a common rule within the markets. If your mate that doesn't necessarily know anything about markets comes in and asks you about it, that's your time to get out, because what that's telling you is the crowd know about it, okay? And you don't want to be part of the crowd. Okay, you want to be in before that. So 52k levels were good. Did I trade this? No. Did I buy some physical on my Coinbase? I say physical, digital on my Coinbase? Yeah. But did I actively trade this? No. I think Bitcoin could be a bit of a wild asset to trade. So I'm not 100% comfortable on it. And I still don't really see the overhaul value of this. When we look at things like gold has it's physical. You can see, you can pick it out of the ground, you can mine it, it has utilities. So yeah, I just don't like the price here, but that doesn't mean that it can't go up. Obviously, you can never call a market top. If you call a market top, then great for you. I say that, yeah, I've called quite a few this year in terms of COT reports, but the COT reports are different. If you look at the COT reports when it comes to the futures market of Bitcoin, so let's have a quick look at it. It's pointed more towards being a buyer, right? You've got 100%, 100%, 100% across here. So yeah, really speaking, if we look at the net moves here, it's been, commercials have been long since January 2023. They haven't reduced those long positions. They're very much long. Hedge funds have been aggressively short Bitcoin, right? And look what's happened to price. So hedge funds are getting it wrong here at the moment. They're heavily short and they're getting battered right now. But there will be a change of this. There will be a change where the commercials think that's overvalued, and we will see some movement down. But it's pure speculation, So whether we can rely on the commercials here, probably not. You're probably looking more at the hedge fund data, and they are shorting at levels that have been aggressive in the past. So we'll see what happens there. We'll see if the hedge funds win in that case, because I think the crowd's involved at the moment. That's all of us for real. Being battered in the market traumatizes you. Yeah, but it's a good learning. It's good learning experience, right? It's horrible. Well, I say good. It's horrible learning experience if you get, if it financially damages you in any way, shape, or form, which is not great, obviously. But I think you learn your best lessons in those losses. You learn a lot about your personality, which I think is arguably the most important thing in this. But yeah, you learn a lot. You do learn a lot. Like I learned, I don't short stock indices. Eddie, welcome. I think Bitcoin is short now. Okay, cool. I think as well, right? Let's think about this in terms of price. Because I talk a lot about your why. Why do you want to be involved in this market? Okay. Now, if I'm looking at the why, you can kind of create both bullish and bearish scenarios for it. But for me, the clearest one right now is to be a buyer. Okay. The clearest one in my mind is to be a buyer because of all the things with Trump and things like that. Does that mean I want to buy it here? No. right? Where would I want to buy it? If I put my trader's cap on, where do I want to buy it? I want to buy it low. Okay, so essentially I want to buy it back down potentially towards this area here. So that is, quite a way away from where price is at the moment. So if I said that and I said, okay, well, I want to be short, then do I have any technical factors here to warrant me getting short? Zero, none, right? If I look at my stochastic, it's in a bullish territory, not bothered by that then. So pretty much if I look at trend, what is the trend doing? Higher highs, higher lows. So unless I get something like this happen, then I'm not interested in being short this market either, but I'm not interested in being buyer right here as well. Okay, I think there's probably better markets to go and trade. If you look at, let's take a look at some other ones, right? Now when Bitcoin's doing well, pretty much the entire crypto market does well. I kind of like to think of Bitcoin as like the S&P 500 of cryptos, right? It has nothing to do with the S&P 500, or it's no way in the same vein as that. But usually when Bitcoin does very well, you'll see all the alternative coins doing well and all the sort of coins in fruition. Now, I don't know what the sort of top coins are at the moment. If we look at Ethereum, which was considered the second largest cryptocurrency, I don't know whether that's the case. So let me know in the chat if it is or not. But we haven't really had the same explosion here over on Ethereum, right? If we look at the weekly chart, it's not in all-time highs. It's actually lagging behind. So if I'm trying to play the crypto scene and the crypto arena, and I'm trying to look for longs on this, maybe I'll go take a look at sort of cryptos that have not necessarily performed as well, and to see if we get some kind of rebound on those type of markets. I know one that I used to have was called Ripple, but I know they were going through some real serious SEC filings a while ago, and the market was in this kind of range. But since then, look at that, Ripple prices ripped higher as well. We were in a large range on this for a good while, so we might be in the bullish era of crypto, right? But you might not necessarily want to go and trade Bitcoin. You might want to go and trade these alternative currencies. Now, I'm not saying that that's what you should do, but that's just the way I would think in my head. The other one obviously is Dogecoin, mainly because of its sort of relationship with Elon Musk and the fact that Elon Musk is in the Trump campaign and X, Y, and Z. I just typed in Tesca. That's not a ticker. And again, if we just kind of quickly jump onto Tesla stock obviously performing better as well, off the back of that, and probably some of the back of the fact that the EVs are going to be tariffed in China. So yeah, I think it's an interesting situation with the cryptos at the moment. So Bitcoin, obviously the most popular, the most talked about. I like it, but not where prices are at. I don't think, not for me anyway. I think there's some better situations going on. One of those situations is the Japanese yen, right? If we go take a look at yen futures right now, and I was really interested in this because the Japanese yen obviously had that really nice bullish run sort of end of July going into September. The intervention from the BOJ had a really good run up. We've then since kind of given up a lot of those gains that formed. Just put this up to a weekly chart. But there could be a bit of a potential reversal situation coming here again. We had the finance sort of minister in Japan talking about the potential of intervention again to prevent kind of currency fluctuations. Because if we think about it, that's what's happened here, right? We had a big influx of buying. That has then come away again. So are we going to get a big influx of buying again? And is yen prices going to shoot up? That's definitely something that's on the cards for me, or what I'm definitely looking or leaning towards at the moment. If we go take a look at the bonds in Japan, right, we look at the 10-year yield heading back up towards that 1.1% area. Okay, and if we look at what happened in history, right, so typically when the bond yield falls, the Japanese yen gets stronger. This was that period in July where we had that sort of intervention period, right? You can see here we had that move higher, and then we had that was kind of like the carry trade that everyone was talking about within the markets, and since then we've recovered that, but we're approaching this 1.1% ceiling again. Now I say a ceiling because the Bank of Japan kind of will intervene around these levels, okay? So it used to be 1%, but they allowed and opened it up for the 10-year bonds to move up to 1.1%. So this is interesting to me because I don't feel like the Bank of Japan will want to see bond yields break this 1.1%. Okay, so that's why I'm looking potentially at this Japanese yen move as well. So this is a really good way to kind of segue into, again, what is the method that I talk about all the time? And I know it could be boring for a lot of people, but for me it's fascinating. That's why I made it. But the why are we looking at Japan? Look at the bond yields, right? Bond yields are moving higher. Okay, if we were to compare this to like a dollar yen chart, or we would compare it to the JXY, which is the Japanese futures index, then you'll be able to see they have those kind of correlations going on. So bond yields moving higher into areas of resistance, which is this 1.1% area for me. We could see some yen strength coming back into the markets if we did start to see some downside here. Now, if we look at the conditions around that, you know, what do I need to see? Well, if I'm looking for strength in the Japanese yen, I want to go and try and trade it against the weaker currencies. One of those for me was pound yen, right? If we look at the daily chart on pound yen, market has been moving higher and it's come up into this area of resistance, right? So between sort of 196.74 and 199, this zone in here, we then consolidated, price broke out of that, and now we're kind of holding at the moment. So I'm looking for a potential for this market to come down. Why do I like this? Because pound is a weaker currency at the moment. Okay, low growth, GDP's down. You know, it's not looking pretty in the UK. Maybe some cuts coming for the Bank of England. So I'm just looking for opportunities now. Now, if I look at the daily chart here, I'm starting to get the sort of the scenario play out. So we had the crossover in the stochastic. It did cross back over, but then it crossed again. We're pointing more to the downside now. When I look at my hourly chart, what I'm looking for is the 50 and the 200 moving average to cross over. Okay, which it has. This isn't an order, by the way. This was I was going to show you the reason why I didn't get short, essentially. But 50 and 200 crossed over. So what I'm looking for essentially is consolidation pullbacks, right? So like this, consolidation pullback. Now, what I was looking for earlier was a break of this trend line, and I would have gone short on the close of the candle. What I didn't expect was the move that happened, right? We had a 150 pip drop, I believe it was. Because I was talking to my dad at the time, and I was like, I was getting him prepared. I was like, pound yen, I like the idea of being short. And you can see we had a 190 pip drop. I was looking to get short around about 195.20. It's basically I wanted to see a close below these lows. Now, technically I had it, right? But look how close that is to that low. I just couldn't get involved with that. You know, when I'm looking at my reward to risk ratio, I would need price to move 180 pips just to get 1-to-1. Now, that's not uncommon for pound yen. I've just showed you it did 190 pips in an hour. But, you know, I'm looking to try and target 190.50. And that's a 2R, which is fine. But if I try and get short a little bit higher up towards 195.25, so we're around this kind of low here, I can increase my reward to risk ratio. So 3.6R potentially. So I'm waiting for, unfortunately for me, it didn't quite set up the way I wanted it to set up. which is fine. What I want to see now is a very similar scenario. Maybe like, even if it could come back up into the highs here, would be fantastic. And if it did, and then we had a break in that sort of trend again on the hourly, I could look to get short again. So I haven't got short yet, but it's definitely on my radar to do that. So from a personal point of view, just waiting for another pullback now. Ali, what's up? Vincent, short Aussie yen from 100 spot 55. Yeah, Aussie yen was on my list as well. If we just flick back to, where did I put the currency strength meter now? You can see, where's Aussie yen? Here. Aussie yen was on the list as well. So we had a weekly bearish close. We had a close below the 50 daily moving average. Momentum was to the downside, stochastic down, daily trend, daily phase. So yeah, I did quite like Aussie yen as well. Again, haven't took action on this move yet. Yeah, it's very difficult to trade a market when it has been impacted by headline data, because sometimes when the market's impacted by headline data, it will just recover the move. And again, we're not quite where I want it to be. We have broken through lows, right? Which is technically a break at the low. But I'd like to see that happen first. I would like to see us kind of break through these zones first, I feel, before I get short. But I don't mind being short this market. If I look at the stochastic, we're pointing down. Great. If I look at the hourly chart, we had a nice consolidation here. You know, arguably could have looked at the sort of break in trend here for the short. But yeah, you're short 100 spot 55, which I'm guessing is kind of this retest of these swing highs in here, which would have been a nice retest. Yeah, I don't mind that. I think depending on the time frame you were trading that, if you were short here, okay, that would have been a great target down here. Right, this demand zone, that would have been a fantastic target, because you could have had a tight stop loss. Maybe stop loss above the highs here. You would have had a really good move down. You just checked and your profits are gone. Okay, well, that's the way the cookie crumbles sometimes, unfortunately. I would have been, see, if I was trading this on the hourly chart, I would be more open to a bigger play. If I was looking at this zone in here, the highs, which is a nice play up there, then the double top here combined with divergence would have been interesting. So you have the lower high in the stochastic, higher high in price. So yeah, that candle here would have been a nice short. And again, I'd have weighed it up in risk reward ratios. ATR at the time was about 20 pips. So if you're looking at your high 17, 37 pip stop, I would have got out way before that low. So you would have nailed the 2R there if you had the 37 pip stop loss using ATRs. Unfortunately for me, because we broke and closed significantly below that low, my trade would have looked something like this. So 27 pips from the, say about 100 pip. I'd need about 100 pip stop loss if I'd got into this move. And I would have been looking at, you know, potentially down here at this low. But I mean, look at the daily chart. Look at the daily chart. It's not the greatest, is it? You know, if I'm looking at that going, no, thank you. Okay. You're technically at a daily level of support in here. Okay. So to try and get short beyond that, or trying to look for targets beyond that low, I think it's a bit brave. So yeah, never forget the higher time frame. Was in 1 to 3 profits, but thought it was going lower. Yeah, I think I would suggest looking at you should have banked. Yeah, well, I was going to say you should have banked some profits. I think if you were up 3-1, I think that's decent. And in my personal opinion, that would have been good for me. But, you know, also trailing stop. Could you have trailed your stop down with the move in order for you to try and be able to bank some profits out of that? You know, at the end of the day, it's not realized gain until it's locked into your account. You know, looking at the hourly chart here, I don't know how you traded this, Vincent. I don't know if you traded like a 15-minute time frame. You know, let's say you traded a 15-minute break of, you know, that move there. Let's say you looked at the consolidation here, which is volume, right? Market breaks out, comes back into the volume zone. You're waiting for another sort of setup. Let's say you took that 100 spot 48 setup there. Okay, stop loss, right, on this 15-minute time frame is 10, so it's the same. It's 37 pips that we were talking about before. You know, yeah, look at that. Look at this area here. Consolidation, move up, price comes in, large volume gets pushed into the market. Anywhere in there, I think would have been a good TP, especially when you shake out to the daily chart and you look across all these lows here. It needed to take a big push to push you beyond that level. Arguably, it's also, if we go back to pound yen, right, it's also kind of why I've stayed out of this little move so far, because we've got this kind of consolidation in here. If I bring in the volume profile, go from the swing low to the swing high, we're around this kind of high volume zone, right? So I'm trying to get a good entry on this, but also trying to wait for it to clear some levels of support as well. That's just in the back of my mind, that little scenario there. But yeah, you can learn from this though, Vincent. You can definitely learn from this, you know, just kind of flicking back to it. If you were to get short and you had a 3-to-1 risk reward ratio, so I'm guessing you went in at 100 spot 55, didn't you? Somewhere around there. And if you had a 3-to-1, then maybe you had a 26 pip stop loss or something like this. Trailing stop would have worked really well here. So market moved down, broke into fresh lows. You could have put your stop loss here, okay? And then if the market made new lows, you could have put your stop sort of below that lower high, or, you know, we didn't really get that, so you would have been stopped out sort of here. Because you've been stopped out, you might think, oh, you know, I was up 3-to-1, but only got 1.5. That's fine, because you've banked 1.5, and then you can go in again, if and only if a setup reoccurs, right? I'd much rather have 1.5 in the account and wait for another setup. Took the trade on MT5, nice. Hussein, I think you need a video headset. That's on it. Thanks, mate. I don't know if to be offended by that, but unfortunately, well, we have brand guidelines at Blueberry that we have to follow. So I hope you enjoyed the new rebrand. So yeah, Aussie yen looks to be moving. Another market I quite liked this week was pound Aussie. There's a difference between what's going on in the UK market and the Australian market at the moment. Now, the Australian dollar has been battered by China. Okay, the situation in China hasn't been good. You know, if you go take a look at the Hang Seng, for instance, market has been moving lower. We are at a bit of support here, but ultimately, the stimulus came into the markets, and we had this explosion, a 26% rise on the Hong Kong 50 index. Since then, we've recovered pretty much the majority of that. You know, we've had a 16.95% decline. If we see them change the loan or the interest rates and provide more stimulus, this could be an area where buyers come in. If that is the case, then the Australian dollar, which on paper is actually a fairly hot economy right now. The RBA aren't cutting interest rates aggressively. They are worried about higher inflation. So there is a situation where the RBA have done nothing with rates, right? Whereas everyone else is cutting. that is an outlier, and that to me creates opportunity. So pound Aussie, I've been a fan of looking for the short on as well. At the moment, I have no short because I've not took a position on this, but we're in a good trading range. The market is in a range. I'm looking to try and play this range. We're at 194s right now. Could get down to the 193s. I was eyeing this up last week, but I didn't trade it. Wasn't as clean as I wanted it to be. You know, I'm being very picky these days. But essentially, we've got the crossover here. Market pullback. We're continuing down. I just need to see another retracement. You know, the averages can stay the same, and then we kind of break out of that to the downside. You know, that's what I'm kind of looking for here on pound Aussie. Hello. May I ask whether you have done gold? I've not done any analysis on gold. Platinum's back up a little bit, which is interesting to see. We've been very short platinum recently. This was a commitment to trader report signal. Here, market fell, which has been good. Nat gas has continued to climb higher as well. Again, another commitment to trader signal. But let's have a look at gold. Gold, I think, is quite interesting. I am I was going to say I'm a seller of gold. I much prefer selling silver and stuff and platinum because we had the COT signals on them, whereas we don't technically have the COT signal on gold. But I think the market is definitely leaning towards shorts now. Obviously, the US dollar has been a strong currency. This looks to be expanding higher. We are at resistance levels, though, so you know, a little bit touchy there. I think the stock market plays a big part in what's going on here. I think if we see further declines in the stock market, then we're also going to see that being felt in the gold market as well. Look, I mean, gold prices have rallied substantially. You know, arguably it could do with the correction, right? It could do with some kind of correction. And we have this kind of support zone down towards $2,500 area. So arguably this could be a bit of a move down towards that, maybe even perhaps towards the 2400s. You know, could try and reclaim the moving average here on a bit of a mean reversion. But you know, look at the 4 hour. There's nothing there for me to do right now. We're in a pullback. We're in a secondary phase, right? You've got your primary phase, secondary phase, primary phase, secondary phase. So nothing for me to do here. I think that maybe if we climb a little bit higher, if the stock market starts falling, then I think gold prices could fall with it. Gold has experienced a downward trajectory since the US presidential election. Is this a short-term correction or an onset of a long-term bearish trend? It's a really good question. Unfortunately, it's not a straightforward answer. I take a lot of influence on what the sort of commitment of traders are doing when it comes to gold. And I'm not quite convinced that the bull run is done yet on gold, but I'm not quite convinced I want to buy just yet either. I've very much been sitting on the sidelines of gold. You know, when I look at silver, we had a commitment of trader signal that came out here. And that was very clear that hedge funds were buying silver aggressively. The commercials were selling silver aggressively. That creates opportunity for me. And we've had this decline since then. And I prefer looking at silver shorts over gold shorts right now. So I'm just waiting for again, setups on this. Very similar with platinum. You know, we had a commitment to trader report signal short, market's fallen, you know, waiting for other setups. Now, silver and platinum correlate very heavily with gold. So I could technically go and look at the gold prices and be like, yeah, you know, because of the correlation, I can play this to the downside. I just don't have that same sort of signal as what the others had. You know, when I look at so gold here, for instance, We had hedge funds buying aggressively, right, which is the non-com positions here. Then you had commercials selling aggressively at levels that we haven't really seen in a good while. So that does create opportunity for me. That means that the market top is likely closed. It has then sold off. Hedge funds have now started to kind of change their positioning. If we look at the hedge funds and break it into shorts and longs, we can see that they have reduced their long positions, okay, which is this green line in here. But they haven't really increased their shorts, okay, so that's why we're seeing the net price kind of coming lower, because they've reduced longs. So, you know, I think if we were looking at this in terms of this is going to be a big switch of, like, to the downside, I'd like to see hedge funds starting to get short, decreasing those long positions as well. That's what I would like to see. So yeah. If the pound is this low on the daily chart, I'm buying. Yeah. I kind of agree with your sentiment there, but also I don't want to be a buyer of the pound. But everything becomes overextended at some point. The only problem is the market can stay irrational longer than you can stay solvent. So, you know, you might try and buy here because it's considered low, right? But does that mean that price is going to turn because it's low? No. What's low, right? What's low? For me, this could easily consolidate, break towards 124s, potentially even to the 123s, when you kind of compare growth of the two nations. One market that you might be interested in, Euro Pound long. I've been very bearish this market. We've talked about getting short at these 8450s, but changing sentiment from the UK central bank is what's interesting to me here. Also, the seasonal play on euro is something that I like to look for as well. This is what I'm looking for on euro. This potential move. Oh, you meant pound Oz? Yeah, the range lows. Yeah, the range lows look good. What moving averages are you using on your charts? So I use a 50 daily moving average, and then on the hourly chart I'm using a 50 and a 200. This is the euro. This is the seasonal play I'm looking for right now, where you get this nice little bottom that comes in around about this time of year, looking to play that to the upside. So again, you know, when I look at these seasonal patterns, I still need to see confirmations across the board. You know, what market is a weaker market at the moment? Well, it's pound, right? So we're starting to see this kind of nice little 4-hour trend develop here. Like the idea of potentially being a buyer of this market. So that support there has been held. So yeah, just keeping an eye on this at the moment. Do I have, you know, the full turning point just yet? No. Or do I meet all my categories? Well, I've got the stochastic turn here. Now, usually on an hourly chart, what I'll be looking for is the 50-200 cross, which is here. Okay. And then I'm looking for some kind of pullback. Now, at the moment, the market did perform a pullback here. There was a nice kind of pin candle here that I could have been a buyer at, I guess. But ultimately, I like that kind of correction, but also I would like a deeper one. So if it can kind of come down like this and then start to base, that would be nicer. Or ultimately, if we had some kind of triangle pattern, so let's say the market forms a bit of a base here, and you get higher lows right into that, so you can kind of draw a triangle. If price breaks out of that, that can usually be quite an explosive move. So I'm looking for one of those really at the minute. When it comes to that, you can see euro is still weaker than Kiwi, Aussie, Swiss franc, which is at a critical level as well, coming into the 9,300 area. That was a seasonal short previously. Euro CAD to the downside as well. You know, you can see that nice little head and shoulders break there on Euro CAD. Euro NOK. This is a market I've been speaking a lot about, the Euro versus the Norwegian kroner. A lot to do with again, Norway's economic policies are an outlier compared to the likes of the euro and the pound. And I think if we see oil prices become supported, Norwegian kroner could get a lot stronger. So I've been enjoying some shorts there recently. What else is there? Sorry, Royce, I missed your message. Oil is on the rise and pound yen has risen towards a nice level on the weekly chart. Yeah, so that will have a big impact on prices. Oil prices would. Very interesting, the situation with oil. You know, I feel like the market was almost pricing in the chance that we won't see any kind of escalations in conflicts. I think that's a dangerous thing to price in. So, you know, I feel like this 67 could be a decent base for oil prices. You know, so I quite like that. Nat gas as well. You know, I think this is a good market to keep our eye on. Seasonally short through December. So keep that in mind. We're coming very close to December, but there was a commitment of trade at Signal. I think it was actually back here to go long. Prices have gone long. So, you know, I am very much just sitting at the moment, sitting and waiting for some really good opportunities. I quite like the pound weakness in the market, but if we look at the sort of the COT reports at the moment, there's nothing too much that's drawing my attention. If I look at the extremes that are going on, commercials are extreme short at the minute, which is unusual considering you've got short in here. So I'm looking for some kind of changes here. So essentially, I actually need the commercials to be long. I need the non-commercials to be aggressively short euro in order for me to want to change my opinion on that market. What's interesting, though, is the US dollar index, right? So this is what I needed to see on euro, essentially. So commercials are long, heavily long, right? Now, let's think about that. Why are commercials long? Why are businesses long US dollars? Okay. Now, it could be the reason is, you know, Donald Trump's coming into presidency again. Now, if we actually think about what happened to the US dollar in Donald Trump's term, it was actually not very good. And the reason being is because everyone assumes that the dollar's going to be performing well because of Trump, because of the tariffs and X, Y, and Z. But usually when the US economy does really well, I'll show you this. I don't know if anybody has read this book by Brent Donnelly. Really good trader, really good macro trader. I think if you want to get anything, you know, to talk about trading, this is a really good one. And I'll just show you a diagram that Brent Donnelly puts in here because it's really good. It's really good just to kind of explain where we are in terms of the US dollar. Okay, so what he calls it, let me change the view here so you can see this in a little bit more detail. I don't know if you can see this. It's called the US dollar smile, okay? And this is something that Brent Donnelly uses. And basically what he's explaining in this is actually when there is a lot of fear in the US economy, the US dollar is seen as sort of strong, so safe haven buying comes into it. So when there's a lot of fear around of US recessions, the dollar performs well. When the US economy is like kind of strong, or global economy is strong, or at least okay, then we usually get a bit of a softer US dollar. And then when we see that sort of strong growth, hawkish Fed, dollar buying. Okay, so at the moment for me, we're kind of at that sort of area where what are the commercials expecting? Essentially, they're expecting maybe a hawkish Fed. They're expecting strong US growth. So we're in that kind of US buying phase right now. But there'll become a point where we kind of go into the different cycle, and the different cycle will be sort of, the economy kind of being slow, or, starting to see at least a softer version of growth. And then that's going to lead to a little bit of dollar weakness. It's a good book. You should have a little look at that if you're interested. So that's where I think we kind of are. But if we look at the commercials right now, long, non-commercials heavily short. What does that usually lead in terms of strategy, right? Usually if I see those two together, I would be looking to be a buyer of US dollars. The only thing I don't like is that the non-reportables are heavily long as well. That could be influenced by the Trump trade, though. How will it affect the market if Donald Trump comes to power and ends the UK and Russia war? I think if he ends the Ukraine-Russia war, then I think we're going to see some very interesting moves. We'll probably see gold higher. We'll probably see US stock markets performing pretty well. You're talking about other things like transport stocks, right? Think about airlines that have to go around those airspaces and things like that. Airline stocks could do pretty well out of it. Or travel stocks. So yeah, there's multiple things that could happen in that term. Oil probably would be less disrupted, so oil prices could probably move a little bit lower on the back of that. Natural gas the same. Do I think he'll be able to do it? That's another question, isn't it? That's another question. The only way he's going to really do it is by giving Putin what he wants, right? So whether we'll be able to do that or not. Morning, right guy. Morning. It's morning for you. It's afternoon for me. But good morning to you, right guy. Right, I've just realised we've been going for over an hour. I usually do these for about an hour or so, or 40 minutes to an hour, but we've run over today. I'm going to leave it there. Just to kind of recap what I'm looking at going into this trading week then. So I like the idea of being short the pound at the moment, which I'm looking into. I like the idea of being a buyer of the Japanese yen, but it's really going to depend on this risk play that we're seeing unfold in the markets at the moment, and we'll see if that can change. But yeah, I quite like the idea of being sort of bearish UK, looking to potentially see if the risk comes into play. Yen, I'll be very interested in the China data overnight. If the China data comes in positive, could be a bit bullish for your Australian dollar, your copper, things like that. So thank you everybody for joining. Please leave a thumbs up. Thank you, Royston, leaving that thumbs up. And I'll catch up with you all on Thursday. So yeah, have a great trading week, and I'll speak to you then. Cheers guys.